All right. Well, welcome to a new episode of the Crypto Radar podcast. I'm Sol Paul, and this is Vegas Darren, as
Right.
the names we chose to go by.
Yeah.
One of us actually lives in the city bearing the name of his nickname, and the other one actually doesn't. But nevertheless, these are what we like to be called. How you doing, Darren?
I'm doing well. How are you, Paul?
I'm okay. It's been quite a shocking week in the crypto world. You may have. So, I mean, this is firmly on my radar today. The ambulance chasers Roche Friedman are involved in the dispute against Craig Wright. They've issued 11 class action lawsuits against 7 cryptocurrency companies, which include the large exchanges Binance, KuCoin, BitMEX, Buybox, etc., as well as some token issuers, including Block One, which, as we know, has recently settled with the SEC, QuantStamp, KDEX, Civic, B Protocol.
So, just for
Status.
clarification, who's behind these class action lawsuits?
They're
who's going
filed by
after
the law firm called Roche Friedman.
Okay.
So they've identified a class which would be American non-accredited investors. They've named all those organizations. The Tron Foundation is in there, as well as principal entities of those foundations. So CZ is in there, Dan Larimer's in there, Brendan Blummer's in there. They are absolutely going after this is one gigantic sweep of the industry. I mean, they've set their sights very high. Yeah, so Roche Friedman alleges in the class action lawsuit that numerous exchanges and numerous token issuers sold unlicensed securities to non-accredited investors in the United States and misled them in some of the marketing. It's interesting to note that a lot of these companies are not based in the US.
Right.
Right. So they're based in the Virgin Islands, in Canada, Cayman Islands, Estonia, Hong Kong, everywhere. And they are absolutely taking it's like this is a blow against the entire industry potentially. So the tokens and just a list of tokens that Bancor, EOS, obviously, ELF, Etherland, a minute ago, Tron. These are big names in the crypto sector. Yeah.
So what do you think? Is it going to be a case where it's like, well, it's the cost of doing business and they pay their fine and they get on their merry way? Or is this going to shut down some of these guys? What are your thoughts?
This is hard to know. I think the entities that are equipped, that have the resources to settle may choose to do that. So I'm imagining Binance, Block One, the exchanges and the likes of Block One and stuff may end up settling. There's another issue of how many people decide to sign up to the class, because it seems as though this is very much a law firm-led initiative. They've identified a class, and if you bought any of these tokens and you're American and you're not accredited, you can sign up and join the lawsuit.
You can get back that $12 you lost on Tron.
Exactly.
In 2018.
Yeah. So
you'll get a percentage of it, right? Everybody will get like a $3 payout or something like that.
Yeah. So the way these things tend to work is the law firm heads up the resources, and they can have investors as well that fund the lawsuit. But one way or the other, when there's no cost for the applicants, the law firm takes a good chunk of the 25-30%, splits up the winnings among everybody else who joins the class. So it is corporate lawyerism gone mad.
Yeah.
However, they've valid targets, I guess, if you'd like to say it. It's a strategically a reasonable move. If you're trying to make some money, it looks like a cash grab to me, but it could go absolutely any way. I think the all bets are off as to what this does to the industry. There doesn't seem to be any adverse reaction in the markets, but it's certainly it's a blow. I mean, it's 11 lawsuits.
Yeah, sure.
Yeah.
Well, I guess we'll have to wait and see if they get any kind of traction, right? So, I think the market will move more when there's any evidence that it's going to move forward or not. Yeah.
Yes. Yeah. There's also some jurisdictional issues. I know that some of the all of the non-US based defendants are going to actually be served via the Hague Convention, meaning it's quite a complex undertaking, this, and it could, if it plays out in full, last a number of years. And the other issue is who's going to be willing to sign up for it. I mean, if you, like you said, if you're the guy who bought $12 worth of shit coins in 2017, then you know what's the point, really? So yeah, it's an interesting move. It does threaten to derail a lot of the ecosystem, I feel. Although, and the other thought that I had was, we know that Tezos, we mentioned a week ago or before, that Tezos had chosen to settle a class action lawsuit.
And Ripple too, right? Or am I wrong?
Ripple has not.
No, they have not.
Involved in a class action lawsuit, but they've not settled. So yeah, this comes on the back of, I think Block One is informative here because they settled with the SEC, but this is obviously a civil suit. So what does it say? It's kind of announcing to token issuers that even if you settle with regulators, we can still sue you. And
so here's the problem I have with this, though. Okay, a lot of these tokens have utility outside of speculation, right?
That's the argument. That's the defense. Yeah.
So they shouldn't be securities then, right? Like, yes, you could say, well, it has some qualities of a security, but it has many more qualities outside of that make it a unique entity that doesn't fall under the same parameters. But it seems like they're going after it for that one angle. And it may be true for some tokens where they have kind of marketed them as like, oh, this is a big investment, you're going to make a lot of money, blah, blah, blah. But a lot of them aren't necessarily marketed that way. A lot of them are marketed on, these are the things you're going to be able to do with this token, right? So I don't know. What do you think of that?
Yeah, absolutely. I think it's going to, a lot of the language in the lawsuit is going to point to the way they were marketed to in the United States. What was the language around that marketing? Yeah, I think that's where projects are going to fall afoul of this suit or not. And this is all, obviously, it's difficult to distinguish, but the utility token argument has fallen flat a number of times against the SEC. So I'm not sure that any token is a purely utility-based token and nothing else. And if it's something else, what is that something else, and how is that communicated with potential investors? I think that's at the heart of this.
Right. And it comes down to, I think part of it is we still have antiquated laws, particularly in the States, regarding all of this technology, where they're trying to fit the definition into, it's putting a square peg in a round hole. They're old definitions for something that's a new and different thing. So, yeah, it's a bit problematic, I think.
Yeah, it's problematic. I mean, I think that while I don't like the kind of ambulance chasing, that attitude that drives this, and that's what's driving it. It's a cash grab, but that's what law firms do. That's what they're there for. So that's, I can understand that. I don't it's not very edifying, but I think what it may do is wash out some genuinely scammy offerings.
Right. Yeah.
And if it does that, I think the ecosystem benefits. If it doesn't, then I think there could be some long-term pain if the defendants decide not to settle, So
see, and that's where my libertarian kind of thinking kind of comes through again, though, is don't those scam projects just fail because of free market economics anyway? I mean, nobody's buying those tokens anymore, right? So so you made your own free choice. This is just my opinion here.
Okay.
You made your own free choice, what was it, 3 years ago, to buy some junk token in the hopes that it would go 100 times its value. And maybe you won some and you probably lost some because we all know what happened, right? And so you learned your lesson, right? And if you made a bad investment, like, I don't know, to me, it's people get out of it because it's not a good investment, and then the price goes down and then the scams go away. I don't know. I don't know if I feel like it needs to go through an entire class action lawsuit to be resolved. I mean, I can see from your reaction that you disagree.
Well,
But
I mean,
I'm kind of presenting an argument here, to be fair.
no,
You
I
know,
mean,
my
and
point
that's
being, sorry, go ahead.
no, I think it's a fair argument. I don't think that's how that wouldn't be the defense I'd be mounting. But
No,
it's
no, I
not going to
know.
go down well in court. But
No.
I think at the heart of this is don't target non-accredited investors with what could be an investment, a security.
But I mean, non-accredited investors, like, the government has no problem with us going to a casino and blowing our income.
Sure.
They have no problem with me going to a lottery, to a convenience store and buying lottery tickets and blowing my whole budget on that. They have no problem with me. Heck, I could go to the dollar store and buy my entire month's budget worth of fidget spinners and lose all my money. Government's not stopping that, but they'll stop it if it's for an investment. Why?
Yeah, sure. And the only language the only comparison there is with gambling, because that's clearly, you promote gambling as, hey, you could win, $10 million on the back of.
Isn't this pretty much the same thing though, really? Isn't this really, I mean, look at the entire, is there a safe investment out there right now? Is there anything that's like, okay.
Fidget spinners.
Do you remember 10 years ago when it was like real estate, buy real estate, guaranteed, like safest investment, right? Would people say that now?
If you were trying to sell it, maybe you would. If you're trying to dupe people, and that's the argument. Are you trying to dupe people who aren't as sophisticated as others into making an investment into something that is not investment worthy?
Right, but that's where the free market teaches you, and you learn from it, and you go, whoops, I shouldn't have spent my $100 on that or whatever it was. I mean, because let's face it, a lot of those were small time, right? Like a lot of people buying into it were buying their $50 worth of Tron or their. Do you remember Verge? Do you remember it being like?
Yes, I remember Verge.
Remember it being like worth like 13 satoshis or something, and then it went up like something. I forget what it was. It's some insane percent. It increased like 18 million% or something like that, right?
Yeah.
I mean, there were people who made a lot of money off of that. And there were people who lost money because, of course, it crashed. It wasn't sustainable.
Yeah.
Right?
Yeah. Well, I mean, so this would be...
I kind of feel like, you know what? You learn your lesson from it if you made a bad investment, just like in any investment. I mean, people who were invested in oil have been destroyed over the last few months.
Do you
sue oil companies?
Well, I mean, depends who they're selling the securities to. If you're marketing them to, anyone can have a private fund and market them to the right people, to accredited people. If you're trying to dupe mom and pop, I think it's fair that there would be laws in place to protect.
How many of these were actually duping people, and how many of them were actually going, hey, this could be a big thing. This could really grow into... I think there was a lot of optimism if you look back to 2017 around like Ethereum and all the tokens. There was a lot of optimism that, hey, you know what, in a year or two, we're going to have like fully functioning token ecosystems where you're not going to need to interact with cash, and it's going to operate on smart contracts. And I remember people being like super optimistic about all the applications of it, right?
Yep.
And
these arguments will absolutely, so perhaps it's good that these arguments are heard in front of a judge.
Yeah, I'm not
you're not down with that?
Submitting any arguments here. It's just my own opinion.
So I mean, if the defense is these are utility tokens and people were not buying securities, there's no promise of future rewards, and they are tokens just like airline miles. You can use them and for certain things inside confined ecosystems. That's why people bought them. If you can mount that argument, you're doing okay.
Right. Yeah, and I mean, I think there are some that were scams for sure, and those ones should be pursued. Right?
Yeah, so I think this is more than just about scam or non-scam. It's about language around how it was marketed to unsophisticated investors. Yeah?
Right.
Yeah. Utility or otherwise, what else was it? Could it have been construed as a security offering, in which case... Yeah, anyway, heady days ahead. I'm not sure how it goes down, but I think, it could wash some of the rubbish out of the ecosystem, which I think we both would agree that there's a lot of. Yeah.
Yep, for sure.
So what's on your radar, Nevada, Darren? What we call it? Las Vegas, Darren.
I don't know about this.
You don't know about the Vegas thing?
I don't know about this Vegas thing.
Right.
I've been watching Bitcoin hash rate mostly because I like saying "I told you so." I don't know. I never get tired of that. I'm a bit annoying that way. I'm sorry.
Go for it, man.
Yeah. It's interesting because you're seeing there was the huge fall at the early stage of March, along with a lot of other stuff that happened in the early stage of March with news. And it kind of had its difficulty adjustment and immediately responded with a leveling off. And now it's kind of in that level bound range, just like the price is kind of hanging around in that. What's Bitcoin's price right now? 6,500 US, something like that?
Yeah, 68, just under 68.
Right. And so it's hovering around in there. And so you've got miners who are, it looks to me like they must be profitable now because the hash rate is steady again. And so naturally, what's going to normally happen is that the hash rate climbs. Now, what's really interesting in this scenario right now is we're about a month away from the Bitcoin halving, which for those who don't know,
that's in May, right?
Yeah. Well, it doesn't have an exact date nailed down because it all depends on how much the hash rate is, right? If the hash rate increases, then it might be a tiny bit earlier, right?
Yeah.
And so if you look at the halving, of course, then people all start to get very bullish because they look at that and they say, hey, if you look at past times that Bitcoin has halved its reward, right? Where currently every 10 minutes there are, I think it's 12.5 Bitcoin that are awarded for mining. And in May, when that drops by half, then you're going to get six and a quarter. Am I doing my math? Six and a quarter.
6 and a quarter. Yeah.
6 and a quarter. I didn't want to say the wrong number. So anyway, 6 and a quarter block reward, which is a huge drop in reward for these miners, right?
It's about half.
It's about half. So
what will the be twice as profitable,
right? And then there's the arguments of, okay, well, is this already priced in? We've known about the halving forever, and I mean, since its inception, we've known about the halving, right?
Yeah.
So is that already priced in? And if you look in the past, when the halvings have occurred, within a few months, the price resumed climbing, right? So if you go by the past, you go, oh, okay, well, it should go up. But of course, there's not necessarily proof there that just because it's done it in the past, it's going to do it again.
Isn't the question of whether the price is halved in or not answerable simply by using mathematics?
Well, I mean, you can argue.
If you're going to earn 6.
You're talking about like stock to flow and stuff like that. And...
Well, yeah. How much is it? You're gonna earn six and a quarter Bitcoin for mining a block. How much are you going to spend mining that block?
Mm-hmm.
And how does that compare with the current price?
Mm-hmm.
Right. And if that's higher than the current price, you'd have to say that the halving is not priced in.
That's the thing, right? Like, to me, it can't be priced in because the price is so heavily driven by miners and a few whales that it will be affected by the halving. It has to be affected by the halving. You're having literally half as much Bitcoin get rewarded every 10 minutes. Like, that's a super huge increase in scarcity. I think it actually makes it scarcer than gold at that point, does it not?
In terms of stock to flow, it puts it around about as scarce as gold. Yeah.
Right. Okay.
Yeah. It's at that level.
So
yeah.
It'll be a very interesting couple of months, especially with all the economic things going on in the world and quantitative easing. And Canada just announced that they kind of actually sheepishly admitted, they're like, yeah, we're doing quantitative easing, right? They actually use those words. So the United States hasn't yet come to grips with using those words, but
right.
It's what they're doing. Anyway, so that was on my radar.
It will be an interesting period. I think that historically, I did some reporting on this a few months ago, and it seemed to be that most of the price gain surrounding a halving And this, you have to sort of make a number of assumptions to get to this figure, but the price gains seem to be longer with each halving, and most the 95% or something, the vast majority of the price gains as a result of the halving. And again, it's a whole bunch of assumptions that to link the halving to the price gains. It all happened. The expectation is that it takes 18 months for the halving to price itself in, following the halving.
Really? 18 months?
18 months, yeah. That does actually include, though, I mean, so it's flawed in some ways, but because it includes the rampant bull conditions at the end of 2017.
Sure. You got to kind of just delete the December 2017 outlier from stuff. And then if you look at it, it looks pretty steady.
Yeah, exactly. So these are the things that we don't really know, right? It's hard to make assumptions. We don't have our sample size is tiny, right?
Sure.
As to what does halving do to the price. It's 39 days away though, man. 39 days and 4 hours.
Wow, you have a countdown.
I've just got, the ETA is May 14, so it will be interesting times ahead. That's for sure. What do you have?
Speaking of significant dates,
did you getting married?
No, I've been married for years. Speaking of significant dates, April 5th, 1933, I believe it was the day that Roosevelt issued an executive order saying, you can't keep gold anymore. We need your gold. You're turning it over. In exchange, you're getting paper. That was today. You wonder, would governments do that again with the current economic situation? I know Peter Schiff wouldn't like that, but
no, I mean, that's a really interesting question. That it's entirely possible, given that, I mean, it's happened before. If they did do it, that would, I mean, that would constitute overreach of epic proportions these days.
Overreach of epic proportions? Are you not seeing overreach of epic proportions all around you in all kinds of scenarios?
Absolutely, so that would fit into that narrative. Whether it would happen, I don't know. If you can forcibly require someone to hand over property,
they certainly can,
and get away with it.
Absolutely.
Politically, though,
the Constitution.
Yeah, but politically, can you get away with it in a Western, in a modern Western democracy? Although in extreme circumstances,
people in fear, right? They feel like it's going to protect them. People will do all kinds of stuff you wouldn't expect otherwise. It is an interesting conundrum, though, for the gold bugs, though, because like if you look at currently, if you are relying on gold, but you don't physically hold it yourself personally, that gold is kept, say, in a vault somewhere. You're not accessing that now. Those things are not available. So much for your gold being your protection from this. You can't even get a hold of it.
Yeah.
Right? And what are you going to do if you've got your gold in your house somewhere and stored away? Are you going to go sell it on the street now? Right? If this is a lot of the gold bugs, they're all about, this is, to hedge against economic collapse. Okay, great. What are you going to do? Go to the grocery store with a bar of gold? It's not going to work like that.
No.
So I don't know if the argument holds, the whole gold argument.
So when that decree was announced in 33, the circumstances under which that happened were, I just tried. Was it Great Depression era?
Yep. Yeah.
Yeah. Okay. So that was because of so unprecedented times call for unprecedented measures, and I guess these are unprecedented times we face at the moment, eh?
For sure. Well, I mean, if it's, say, jewelry, there's some difference with the way that works, because I was reading something about if it's jewelry, then it doesn't get seized. But if it's like gold bullion, like coins and gold bars, things like that, it could be seized. It's possible. I'm not trying to make people freak out or anything. I'm just saying it doesn't have the same unconfiscatable qualities of Bitcoin.
Okay. So what does that say about, it's never had that then? If it's been seized before, I'm not sure where the assumption has always been that gold is your safe haven.
I think it's I do agree having gold probably is a good hedge. But it's not the be all end all. It's not.
Right. Okay. Yeah.
What are you going to put your money in right now that you're, let's say, 90% sure is going to go up in value?
Healthcare stocks. Just off top of my head, 3M.
3M.
But I know that was a rhetorical question. You didn't actually seek an answer to. Yeah.
Yeah.
So what does this say? If there is a threat, if let's say there's some threat because it can happen. What's the impact on the cryptocurrency markets? It must be positive.
You would think so. You would think people there's stories of people trying to get out of even certain countries with gold. You can't do it. Like, what are you going to do? How are you going to get out of, say, Venezuela with a bar of gold? You're not. If you stored a 12-word phrase in your mind, how are they going to stop that?
They can't.
So
yes. Yeah.
There are obvious advantages. And people will say, oh, but it doesn't have any actual value. It's like, what has objective value? There's nothing that you could say purely has a given value that everybody agrees upon. It's subjective, right? Everything that has value, it depends on what someone else is willing to pay for it. You could say objectively gold has value in that it's not a dictated value. It's not a value that, say, any government or whatever can say, okay, it's worth this much, unless they seize it, right? So, for example, in the case with Roosevelt, they said, we're going to give you, I don't remember exactly how much it was, but we're going to give you this much per ounce of gold. And the positive at that time was the dollar was actually tied to the value of gold. And you could later, once things settled a little, you were able to actually take your dollar in and get the same amount of gold that your dollar was worth, right? So there was some actual value to that piece of paper that said it's worth this much gold. Of course, they did change it. They said later on, okay, well, now your dollar's worth this much gold, and it was worth less, right? So they first bought your gold off you for a certain price, and then later they changed the price on you, and instantly your money that you were holding in your hands was worth less, right? Because they just decided it's worth less. We need it to be worth less. So.
Wow, man, these are crazy, unprecedented times. Hey, it does make me bullish on Bitcoin in that sense, because it to me feels like where do I put my life savings?
I know it's troubling.
Where's safe anymore?
Well, and that's the thing, is that we've known for years now Bitcoin is volatile and it is risky, right? But it's only recently that people are going, wait a minute, everything is volatile, everything is risky.
Yeah.
We could see the real estate market drop by 50%. We don't know. It could, right?
Yeah. Well, if there's no jobs and people can't fund mortgages and pay rent, that could very easily happen.
It wasn't that long ago that houses in Detroit were selling for $1, right?
Yeah.
That could happen again. We talked about this a little while ago, when then after that people swept in and bought these lots of 1,000 houses. Remember, you were telling me about that?
Yeah, Mnuchin, your mate, was a big player in all that conundrum.
Yeah.
Yeah, terrible, disgraceful. It was disgraceful. Yeah, no, anything could happen. All bets are off, I think, at the moment is probably the message here, and I'm calling it bullish for Bitcoin.
Yeah, I'm with you. You. Again, this is not financial advice.
No. This is not at all nothing like financial advice.
Everything is volatile. Everything is risk on right now, including the safest investments, including gold, including real estate. So, I mean, if you look at Bitcoin over the last couple of months compared to, say, S&P, I think it's faring better.
I'll tell you, speaking of the legacy versus the new, I had a look at the FATF, which is a terrible, I don't know what, the Financial Action Task Force. And I always thought the FATF. Yeah, the FATF.
Sounds like you're going to say something bad when you do that. But.
I always thought the task force was one word. So in which case they'd be called the FAT. But I guess that's even worse than calling themselves.
They added the F on, I guess. Just.
Yeah. This was, I was doing some reporting that, so the FAT issued the United States with a less than stellar rating in terms of their compliance with AML regulation, global AML regulations. it was, they did okay, but you need to do more. And one of the things they were particularly not amused with was that there's an occasional transaction reporting threshold, which the FATF wants at 3,000. Sorry, at $1,000, $1,000. That's that law. There's if you're transmitting money between states or inside a jurisdiction, a country, it's $10,000.
Right.
That the financial institution must report to the government. It's to combat money laundering, right? And
Yes.
But it's also illegal to send money of $9,999 to fall below that trigger amount. That's called structuring if you do that. So essentially everything's illegal. Anyway, the FATF wants crypto exchanges to be monitoring amounts as low down to $1,000. Currently in the US, it's 3,000. FATF wants it to be 1,000. And what I found ironically here, the irony about all this was that last year, or the last 15-month period, was almost record amounts of money laundering in the legacy banking industry.
Mm-hmm.
And Finergo is a risk management firm. CEO Mark Murphy points to one example where a bank was processing $350,000 a week in deposits from a butcher shop.
Right.
And it turns out from a simple Google map search that it was a pawn shop and it was owned by a Mexican drug cartel. The bank turning a convenient blind eye, no doubt, to this.
Which bank was that?
Unreported.
Okay.
Yeah. On the west coast of the US. $350,000 a week from a butcher is a hell of a lot of $12.99 sirloin steaks, I would have thought.
A lot of pork tenderloin.
Yes, yeah, exactly. So, and it turns out it's a pawn shop owned by a Mexican drug cartel, easily find-outable using Google Maps.
You can find that it says Mexican drug cartel on Google Maps with the pawn shop?
Yeah, exactly, right. Pawn shop.
Sinaloa pawn shop.
Maybe that was his name. But yeah, I just found this ironic that the FATF is moving on crypto exchanges again, and even in countries where AML regulate, they're quite compliant. They're very compliant. They still don't get an A, and yet this is on the back of an almost record 15-month period in terms of bank fines. $10 billion worth of fines banks slapped with over the past 15 months because of money laundering.
Yeah,
so,
well,
yeah. This is
if you don't know much about banks and money laundering, there's actually a Netflix documentary about it called Dirty Money. Have you ever seen that?
I've not seen Dirty Money. I've not heard of it, actually.
Yeah, it's on Netflix. It goes into all kinds of money. Like it talks about how HSBC was doing money laundering with Mexican and Colombian drug cartels. HSBC. And here I'm looking, it says it was a Netflix documentary that re-examines HSBC's $881 million money laundering scandal. Right?
Outrageous.
And yeah. It's a bank that at the time was making $17.2 billion in profits. So, hey, A-OK, no problem with HSBC money laundering. Right.
But Joe Crypto can't send $3,000 worth of Bitcoin to his mom to pay the rent.
It's so disproportionate. Disproportionate.
Yeah.
I don't know if it's because there's nothing they can do about it. And so they feel like, well, at least with crypto, we can kind of chase it down because of the distributed ledger, the nature of digital ledgers. But it's how much money laundering is done from crypto compared to what banks are doing. It's got to be like less than 1%. It's got to be.
Yeah. It's absolutely marginal. I think that's been proven. Earlier days, there was a lot of illicit activity.
Right, sure.
That the cryptocurrency was involved in. But as a percentage of cryptocurrency and as a percentage of illegal transactions, illegal crypto transactions are tiny, absolutely tiny.
Well, and I mean, banks have been historically criminal in this regard, like J.P. Morgan. You Bernie Madoff, the Ponzi scheme. J.P. Morgan handled those accounts.
Allegedly, yeah. No, allegedly, it's a risk reward. It's a cost of doing business type issue for banks. We can launder this much money. This will be the fine when we get caught. It's still worth us doing that business.
Sure. Yeah. So I guess in the case of crypto, they're trying to clamp it down before it becomes so profitable that it's just a cost of doing business.
Which I'm down with.
Because it's small enough, right?
You gotta be looking at it's incredibly unreasonable to think that the impact of these efforts are going to be so small in the total AML fight that it's really not particularly worthwhile. Anyway, that popped up on my radar. Have you got another item in your sights?
Well, Journeys in Blockchain. Last week I talked with Yoni Asiya, CEO of eToro. Again, that was a very interesting story. I talked about it a little bit last week.
Yeah.
But yeah, go ahead and check that out at Cointelegraph magazine. Journeys in Blockchain. There's my little plug. It's a good story. This next week, I'm still lining up who I'm interviewing, so I can't really say anything about that one.
You can't reveal? All right.
No, because I don't know if it's happening or not, frankly. So I have to wait and see. That's always the tricky part is, you got to line up somebody and then find time to talk with them. And yeah, it's a process, but I'm sure you know that. You've been through that yourself a lot, I'm sure.
Yeah, it certainly is. Yeah, I know what you mean.
Yeah.
Well, Darren, it was great talking with you again on this 4th episode of the Crypto Radar podcast with Soul Paul and Vegas Darren, or Edmonton Darren, however you'd like to.
Whatever. Darren.
Will be.
It's fine.
Oh, Darren. Soul Paul and Darren. Darren.
That's got a good ring to it.
I'm Soul Paul, and that guy's Darren. And we'll see you again this time next week for our next episode of the Crypto Radar podcast.